But it seems like that there are a lot of prop firms out there that have a bunch of spare money just to give away to you when passing a prop firm challenge. So let's get to the bottom of this and let's find out whether this is all legit or whether there might be some infinite money glitch going on here. Welcome back to the $10 Million Stew. I am your host, CoffeeZilla. Not really. wrong video. But we are going to be doing some detective work today. Very nice. What's going on? My name is Dillon. Welcome back to the channel. So in the past couple of months, there has been a lot of talk as to whether these so-called funded prop firms like FTMO, Fivers, CTI, Funded Talent are all actually real prop firms and whether they are legit or whether they are scams. So in today's episode, we are going to get to the bottom of this, and by the end of it, I will also be giving my opinion on the situation and also my opinion on how to best position yourself to avoid joining a scam firm. And now I warn you, because the first half of this video is going to look like that I am giving away a bunch of FUD. However, this is all factual information and information that I believe you should know, so that way you can make a more informed decision on picking and choosing which prop firm you want to join. And so if you do stick with me through that and stick with me through to the end, I'll also be giving my opinion, as I mentioned, but also shedding some light on the positives of this situation. Now, there seems to be a plethora of prop firms that have just magically come out of nowhere, and I've always thought to myself, how do these prop firms have all of this money, and why would they be giving it to traders simply by passing a prop firm evaluation challenge? Now, it seems to me that a lot of prop firms have magically come out of nowhere. After around about 2018-ish, there was a big influx of prop firms who all have this spare money to give to people to trade. The only thing you need is a little bit of experience, maybe a little bit of luck to pass one of these evaluation challenges and then to get funded. So you may have heard of FTMO, Fivers, Funding Talent, the prop trading, and Lux Trading, also BlueFX, FX Seed, the list goes on. If I had $1 for every time that someone asked me to do a review on one of these so-called prop firms, I would probably have enough money myself to actually start my own funded prop firm. But what if I told you that you don't actually need any money to actually start one of these funded prop firms? Funding Talent. Now, first and foremost, Funding Talent is a Forex prop firm that incorporates a trading challenge. Now, when joining, you have to pay a fee to actually be a part of the challenge, but if you do pass the challenge, you then get a funded account. Now, once funded, any money that you do make, of course, gets split with the prop firm because they are giving you their money. You're not going to keep all the profits. They want to make some money too, of course. However, what's really good is if you lose any money, well, that's okay, because you are not losing your money, you're losing the prop firm's money. And as I mentioned before, especially with the fail rate in trading, it really makes you question how all of these prop firms want to magically give you all of this money, somewhat like a charity for you to go trade. They take on all the risk and you take on very minimal risk. Now, the thing is, I do use the word prop firm lightly because in the meeting minutes of a hearing between Funding Talent, represented by the founders Jessica Gainey and Anthony Satar, versus the state of Nova Scotia in Canada in March 2021, really shed some light on the entire situation. Now, I'm going to leave a link in the description below of this video, plus a link to a bunch of other resources and research that I have done on this topic for you to go see and verify yourself. Now, the reason why this hearing took place is because the Nova Scotia Securities Commission issued a temporary order against Funding Talent to freeze all of their accounts, as Funding Talent appeared to have conducted trades in securities or derivatives without being properly registered to do so. Now, firstly, just to give some context and background on the situation, at the time of March, Funding Talent's website said that account holders would pay a subscription fee and monthly fees. A member is first given access to a demo account, and upon certain conditions being met, the member may be given a real account. Now, Jessica Gainey provided a written affidavit, which an affidavit, all that is a statement that has been signed and is declared as true at the time of the hearing. The affidavit did say that the company is an online pay-to-play learning platform for members who want to play and learn how to invest. Play and learn how to invest. None of the accounts contains real dollars and no funds. Profits are paid from revenue generated through subscription fees. The real accounts do not contain real dollars. Members using any type of account are never in the real markets. All trades are conducted on demo accounts. Members have access to what is akin to monopoly money, and there is no profit sharing as the credits are funded through subscription fees. So what were the findings after this meeting? Well, after the affidavit was received, which sounded more like a confession, remember how I mentioned before that accounts were frozen? Well, the freezing of the accounts were removed because it was found that traders weren't actually trading real accounts. So because they're not trading real accounts, they're not then classified as trading real securities or derivatives, and therefore there was actually no breach in the Nova Scotia Securities Act. Now, after this hearing, this actually forced Funding Talent to be more transparent, remodeling their actual business model and prop firm challenges, and being a little bit more clear on their website. Now, out of this whole thing, I want to share with you what is the most important thing out of this whole spiel, and that is the company was incorporated under the Canadian Business Corporation Act and is registered to carry out business in Nova Scotia, Canada. Now, why is this important? Well, in other words, this is a well-regulated state and country, which is why this whole thing actually unfolded and why Funding Talent had to make it very, very clear that the accounts were traded on demo. And because they're trading on demo, they're not actually trading the real asset, the real security, or the real derivative. They're not actually trading real accounts. So that way they weren't in a breach of the Nova Scotia Securities Act. And since then, Jessica has also come out again with a post on Funded Talent's Instagram page, which states that Funded Talent makes most of its profits from subscription fees. This is simply how the prop firm industry operates, implying that Funding Talent is not the only prop firm that operates like this. No Forex prop firms that accept US, Canadian, or UK clientele are authorized to give direct access to live accounts without regulation, which is exactly what happened to Funding Talent, and the reason why they had to be very transparent about trading demo accounts and not trading real accounts, because then they wouldn't have to go through the whole regulation to trade securities. And this is also the reason why they had to remove all branding of a live account being used on their website. Now, remember, these are the comments that came from Funding Talent and Jessica Gainey herself. However, she makes a very bold hint, as I mentioned before, that all online prop firms are doing the same thing, giving out demo accounts to traders and never actually giving you any real money to trade. So this now leads me to the next question, which is, why give demo accounts? Well, it's funny because Jessica in her Instagram post actually said it herself. The reality is most traders are not successful in the markets. And we know this because all traders start off wanting to try to get rich quick, where 40% of traders only make it 1 month, 80% of traders actually quit after the first 2 years, only 7% remain after 5 years, and then you're left with 1% that might actually be profitable after net fees. So in other words, only 1% of traders end up being successful in this industry, particularly in the long run. So how do you create a business model that exploits the simple fact that majority of traders actually fail? Well, to do the complete opposite to what traditional prop firms actually did in the past. So instead of actually backing traders and giving them real money in the hope that you find the 1% of traders that actually make it, what you do is give all the traders demo accounts so that you're not taking on any of the risk, you're not losing your own money. What you then do is then charge traders a joining fee and then get them to try and pass a prop firm evaluation challenge where majority of the traders are likely to fail. And look, I'm going to be honest, that is a very genius business model. And even if you do pass a prop firm challenge, you are still on a relatively small account. Of course, that might be on demo and you have to work your your way up to actually see any substantial profitable gains to get access to a higher account that might make things worthwhile. However, as I mentioned, in the long run, research shows that 99% of traders actually end up failing. So although a prop firm that runs this business model might be paying you out of their pocket from the subscription fees that are made from other traders, it's likely that you might not be there for long. And so if you are the 1% or even the 1% of 1% that is consistently profitable, that makes a lot of money, it's not until this point that the prop firm may actually consider you as one of their elite traders and may actually consider giving you some real money and giving you a real account and actually do the whole profit split scenario. But I have to say, this is definitely a dime a dozen, and having a real account with real funds and not trading on a demo may not happen because the prop firm may have to be well regulated to trade securities. So now that we know that these prop firms are now providing demo accounts opposed to real accounts, how do they do it? So let's just go back to the start. Now, if you want to make a demo account, MetaTrader will have your back and they will give you a demo account which has fake money within it, and it doesn't necessarily connect to a broker. Alternatively, if you want to make a real account, your MetaTrader will then have to be connected to a broker which has a pool of money, and because your MetaTrader account is connected to a broker, the demo label goes away on your MetaTrader account and it will say real on it. However, a revelation of the Forex guru space details the witty craftsmanship of the Forex industry. So to fake it, what you do is connect your MetaTrader account to a broker, and this, as I mentioned, will give you the real status or the real account banner on your MetaTrader account. However, what you do is you actually fake the broker. You create your own broker with infinite money glitch, and then you set how much money the broker has. Now, I have to say, this does sound a little bit like Tether. Now, because you are faking the broker, you're not exactly executing real trades, of course, and it works very similar to a demo account, but possibly slightly different. Of course, this is all with fake money because the broker's fake, but it looks like it's real on the MetaTrader platform because the MetaTrader platform doesn't know any better. All it's doing is connecting to an external broker, and it will think that it's a real broker. Now, I'll leave a link in the description below which shows a very interesting article and a very interesting read that gives some information on this particular matter. So I know we spent a lot of time about funding talent and the whole situation that has unraveled here, but what about other prop firms? Now, just to quickly wrap up funding talent, what I do like about Jessica is that she and her company is now being 100% transparent. On their Instagram, they are frequently showing payouts to their traders for their profits, and they have mentioned that they will be tracking their elite traders for their payouts. The thing is that funding talent has to be transparent because, as I mentioned, they are based in Nova Scotia, Canada, which is well regulated. But what about the rest? Well, Fivers, who has a UK office but headquarters based in Israel, has come out and said on a video on the channel Trade Connect VVS that traders are absolutely paid out by their profits that the traders make. And although Blake from Trade Connect VVS was comfortable with the response, the Fivers CEO did not confirm whether any other profits made from trader fees due to the challenges also were incorporated into paying out the traders. I know he said absolutely, but it's still not clear cut for me. Now, in the same video with the Fiverr CEO, he does come out and say that because the platform connects to a broker, you're now incorporating trading execution issues like slippage and spreads, which you can't typically find on a demo account with perfect execution. However, it's not 100% clear because what I mentioned before is that MetaTrader is not trading on a demo. It is connected to a broker, but the broker is faked, and this might be able to incorporate the things like slippage and spreads without actually having real money in the broker. Now, the Trade Connect VVS interview with the Fiverr CEO was really the only interview that I found that went into this level of detail discussing the matter at hand. And everything that I did go through is just the information that I could find for these particular prop firms. And so the verdict, can we confirm that the prop firm industry industry is all a big fugazi. Now, without any other statements from other prop firms that admits that the accounts are faked, all the firms are based in a country that is well regulated, and the firm therefore shows evidence that they are regulated and can trade these securities. We cannot confirm whether the prop firms are legit or not. And although Jessica Gainey did come out and say that the prop firm industry all operates like this, even she cannot confirm whether these prop firms are all operating on the same business model as hers, and this is still all a bunch of speculation. However, as I mentioned at the start, it is very strange that all of these prop firms look like they are operating on the same model. Majority are based in what appears to be low regulated jurisdictions, and all of them have some spare money to give away to you after passing a challenge. It does leave a little bit of suspicion. And so what I want to do is do a quick little exercise here, and I want you to think about this same question. Now, if you had a spare $100 million, would you be giving it away to traders that you don't even know, all by simply passing a simple prop firm challenge? I personally would not, because if I had a spare $100 million, I'd be putting it all into Bitcoin. Okay, so look, so why does all of this actually matter? Because looking through some of the comments that I've seen on YouTube, all people seem to care about is whether they get paid or not. And firstly, in my opinion, I think it matters, and it does matter a lot. And now, if you're familiar with the Forex space, you'll know that it is full of fake gurus with rented out Lambo that do fake MetaTrader accounts. And now this is just on a much bigger scale, and it's now gone from individual gurus to now whole businesses that are doing similar things. And when it comes to Forex, it's really hard to know who to trust in the Forex space and who not to trust. Of course, with the exception of your boy Dillon, you can always trust me. And the reason why I worry about this space is if there is a situation where the whole thing blows up, it then again is not a good look on the entire Forex industry. And some of you may consider the moral behind some of these prop firms, because what you are getting paid in is from somebody signing up and failing at the challenge. Okay, so what do you do if you want to pursue joining one of these funded prop firms? Now, you're not going to mitigate your risk entirely, as you are being funded by a company and you are reliant on the company to stay afloat. And just like any other company, they will require a constant inflow of funds coming in. And so if the company does incorporate this trading on demo business model, that means that the only real money that are coming in is people signing up to the challenge. So I'm going to be answering the question about what do I think about this prop firm? What do I think about this other prop firm? I'm not even going to look at the prop firm, because the only thing that I care about is one simple fact. And that is, in my opinion, to join a prop firm that is well known, that is growing at a consistent rate. FTMO and even Funding Talent are both very, very well known. And I believe Funding Talent has grown a little bit because of all the news that's come out about them, but also because of their transparency about the situation. Good on them for doing that. And although Fivers do claim to be funding real accounts, if you do have a little bit of skepticism about them because of the whole space, they are still a very popular one and one to consider as well. However, a big point of caution is that this space is growing, and that, as I mentioned, there seems to be more prop firms coming out of nowhere, adopting very similar business models, which will increase the competition, driving more people away from the more popular prop firms to possibly some newer ones. And this will, of course, dilute some of the money that's coming into some of the popular prop firms, of course, increasing the risk that they might actually run out of money to pay you. Furthermore, as more people fail, the likelihood for them to actually redo a challenge and give it another go actually goes down quite a lot. So this space is now reliant on a new inflow, new people to be coming in, which may flatten out and plateau eventually. And so you can mitigate your risk by trying to join one of these prop firms that are more popular, in the hope that they keep getting a new supply of people coming in. However, there is still a lot of uncertainty. Now, what would be the best scenario, of course, is trying to join a prop firm that is well regulated, that provides you with a real account, so that you're not reliant on the constant inflow of people coming in and joining, so that way you can still get paid based on your profits. Because of course, if you're making the profits, you're the one with the profits, which then can be split back to the prop firm. Of course, it's not as simple as that, but again, it's all about risk mitigation. However, the problem is that I'm yet to see a prop firm out there that I'm 100% convinced on that they do provide legitimate accounts, that they are legitimate prop firms giving you real money. Now, the closest, as I mentioned, is the Fivers from the interview with Trade Connect VVS, However, there is still some questions that I have left unanswered, and we are still reliant on taking their word for it. However, for what it's worth, I believe now you are better informed about the entire situation, what are the risks, how to mitigate the risks. So I'm going to let you be the judge of that. So what do I think about the whole situation, and what am I going to be doing moving forward? Well, as some of you know, and some of you have been watching, I am doing the Fivers challenge, which I'm still trialing, and if I do pass, I'll of course be funded, and I will continue to trade there. And although the space is filled with a lot of skepticism, it's still a good opportunity for you to make some money trading without you taking on really a lot of the risk. You're not trading your own account. The only risk that you are taking part in is actually the challenge fee at the start. And if you do pass, some prop firms actually refund you that trading fee, like the Fivers, which is really good to see. And now, even if I do stay with the Fivers and the whole thing does come crashing down one day and it is a whole big fugazi, well, really, I haven't lost too much money and I have very little risk on my end. I'm not trading my own account, I'm trading somebody else's money. And even if it's real money or it's not real money, at the end of the day, it doesn't really matter because I'm mitigating my risk. I'm joining a very popular prop firm. And so if it does come crashing down, of course, there might be alternative prop firms out there, but if all of those come crashing down, I can always go back to trading my own money, and that of course is fine too. So now that you know the facts of the matter here, the risks involved, you are now better informed in this space to make your own decisions as to whether you want to join a prop firm, and of course how to mitigate your risk when selecting different prop firms. As I mentioned, a good way to mitigate risk is to simply join a popular one that's going to have a constant inflow of people joining. And that is, of course, if this whole prop firm industry is modeled just like this. However, as I mentioned, we cannot conclude whether all of the prop firms do operate like this. Although they do look very similar, there's really no hard evidence that I have come across just yet to confirm whether this is the case for all prop firms or just for some. So of course, that is the end of today's video. I will continue to be watching this space and I will keep you up to date in future if there are any changes or findings that I do come across. So I hope you enjoyed this detailed research type of video. I do appreciate if you would smash the like button and consider subscribing, and of course hit those bell notification buttons so that you can be informed when I do release my next findings of these prop firm scams. So with all that being said, super appreciate all of you for tuning in to the end of this video. I hope you have an amazing rest of your day. Happy trading out there, and I'll see you in the next one.